transportation companies have lots of different risks. Where we see the most interest within the captive space is certainly on the auto liability and auto physical damage pieces. That usually is where the major premium is and is a huge driver. Outside of that, we do see some interest, obviously, on workers' comp. We see interest on cargo also, but most of our transportation companies do focus on auto liability. And where we see that within captive structures is usually within a single parent captive or possibly a risk retention group. Although I will say that there has been some notable risk retention group failures within the transportation space. So people need to be very careful when looking at that as an option. It needs to be very well capitalized. And sometimes there's more comfort in the single parent captive space. So when we start the conversation, there's usually different options, and where we focus on is usually the auto liability. So there may be three options, for a company. So that's either looking at a deductible reimbursement structure, looking at a fully fronted captive structure, and possibly looking at a risk retention group also. The most important thing really within the auto liability space is that if you're a fronted captive, you need admitted paper to write auto coverages. Same as workers' compensation, it has to be an admitted carrier. You can't write any business on surplus lines typically.
So one of the main things you're going to look at is reducing your premiums. If you're a safe company, you have low claim history. A captive allows you to with a little flexibility to take risk where you want. You can buy reinsurance over specific layers or take larger deductibles. Thus reducing your premium and increasing sort of a little bit of the risk that you take yourself. But with a good claim history and a safe culture, that can really pay off in the long run in terms of underwriting profits that you get to keep in the captive and thus keep as the parent company.
Most of our clients that come to us, usually they're the better performing clients. They feel they've been unfairly treated within the marketplace. A key factor as well is that the parent is financially strong. We had two opportunities this week come in, and one was a trucking company for retail goods, some very well-known brands and establishments. They had very strong parent financials, and they had really good claims history and losses. And that's a really good fact pattern for starting the captive journey, where you've got a lot of finances to take on the risk, which makes carriers much more comfortable, particularly for collateralization of captives. And that's looking like it's going to be a very good opportunity. We had another opportunity that was a smaller trucking entity that did similar, I suppose, similar transportation, but the parent financials were very weak. They had very poor cash flow. They didn't have much assets, and even though that the owner had a lot of risk appetite, unfortunately the finances didn't back up that. So part of the process as well is to try and advise where makes sense right now. And for the financially stable captive owner, we're going along a feasibility process now to place their business. But for the financially unstable, we had a good talk about it of what makes sense and what doesn't. And even though they have risk appetite, they understand that it's better to stay in the commercial market at this point in time. One reason that you may want to open a captive for transportation is due to the tail liability of when premiums are paid and when losses are paid out. Particularly in the auto liability space, it could be a number of years before claims are actually being paid out. And for the very large claims, there's a long legal process that is involved. So many captive owners can benefit from putting the premium in their own captive, which is earning investment income, which otherwise would be earned by the commercial carrier. And over a number of years, you're earning investment income on that premium until it's paid out. So there can be significant earnings within a captive insurance company rather than when you just pay it directly out to the carrier and they're making all of that investment income from you. What we see a lot as well is, within the space, there's a wide variety of transportation groups. So whether that's trucking, fuel haulers, core bus and livery. There's multiple types of entities all having difficulty within the marketplace. I think rates were up 10% last year. It's growing year on year within the space. There's a lot of nervousness around nuclear verdicts as well. And a lot of our clients already have um, relatively large retentions, and their carriers are pushing larger and larger retentions on them because they want to get out. Carriers really want to get out of the frequency space within auto liability, and really that's where the captive can come into place because that's what we want to look at. And when you're looking at a captive structure, you certainly have more options. There's more carrier partners, and there's a better relationship over a number of years. So if you have a fully fronted captive, um, you typically have a great relationship with the carrier. They understand your risks a lot better. It's not, rate increases are a little bit more stable. There's a good relationship. There isn't a situation where, this is being non-renewed or, your carrier is pushing more and more risk on you that you don't want. I think there's a much better partnership overall when you have a carrier and a captive.
One of the things that's going to make you successful as a captive insurance company is, a low claims history, a commitment to safety, good best in class risk management. The first thing we're going to look at when we do a feasibility study is your loss ratio. So we're going to look at, do you have a good loss ratio, that 30, 40, 50%? That certainly that drives the success of the captive. But there's a lot of other factors that go into, a successful captive as well. We have to look at, the size of the premium. So, does the premium size make sense for a single parent captive, or are you looking possibly more to a risk retention group or group captive? So, all of those things are considered when looking at whether a captive makes sense for you.
We're a full service captive manager. So that means from day one, we're looking at all of the risks, educating on captives and looking where might fit within a captive structure. We do feasibility, which is the starting report, the formation of the captive, and as well as the day-to-day management. So all through each stage, ORMA are there to assist. Where we see in the transportation industry a lot is we see a lot of brokers who want to start a captive but may not always have the specific expertise within the captive space, even though they're incredibly knowledgeable about their own individual clients. So, we really work very well in tandem with our broker partners to, go through the steps and stages of the feasibility. So to look at, what retention layers make sense, trying to connect with fronting carriers. We've good relationships within that. We've helped a couple of brokers package together full market submissions to brokers or to fronting carriers because oftentimes our broker partners, they may have a lot of the expertise within it, but we provide the bridging gap between, talking with the captive underwriters rather than specifically the large account national underwriters also. So there's a lot more information that goes into that process, and ORMA consults all across the board to help brokers make that jump, from a captive piece to, or from a commercial piece to a captive piece. We always work through the education process with the client. And as I said, the first piece is the formation. So we're looking at the insurance lines, the coverage lines. We're looking at the ownership of the captive where it makes sense. A domicile analysis is a huge portion of any captive. So really, we're looking at where the structure of the insured's, states where they operate, all the states they, do business in, and whether a U.S. captive or possibly an offshore captive like the Cayman Islands makes sense. There's a lot of nuances between the captive domiciles. When we look at all of the varying stages of what risks, what collateral may be associated, what fronting carriers may be involved, and it makes sense for the client to move forward to a formation process. ORMA are engaging with the legal providers to form the captive insurance company. We're preparing the regulatory license application, which includes the business plan, detailing all of the operations and very important specific details of the captive, and working with the client and broker through that process so that they understand the timelines and pulling it all together within expected timeframes. Domicile regulators typically within 4 to 8 weeks of a full license submission, review the license and approve it. At that time, then once the captive is fully licensed and capitalized, you're able to start writing business, buying coverage, and you're into the day-to-day management of that process. ORMA does all of the regulatory reporting, the financial accounting, coordinating with actuaries, legal providers, tax and audit. So we try to make it as turnkey as possible for each captive owner and make it as smooth for this process, because we understand that the captive owners are experts in their own individual space. They understand their business so well, but they're not insurance experts. So we're really there to provide as turnkey a service as possible, even though there always is involvement from executives within the captive operation, because it's such a key part of their risk management framework.
And Kev, I think you touched on it when you talked about our broker partners and the client's broker. We're very much broker neutral. We'll work with brokers across the board. We're not looking to replace your broker. We'll work with the client broker on all of this and make sure that the captive structure is fit for purpose for the client's needs.
Uh, Absolutely. The broker is an essential piece to any captive placement, and that's not our role. We're not brokers placing business. Really, what we are is facilitator to brokers to be able to make those placements. So wherever there's gaps, between the fronting carrier's requirements and the broker's information, we're providing that comfort and knowledge gap that to help all of our partners.